Good morning, good afternoon, or good evening, depending where you are. Welcome to our November World Agricultural Supply and Demand Estimate Update. And this is an important one, features information about the harvest that is just wrapping up across the United States. I'm coming to you live from Dubai, where I'm participating in a regional planning meeting here in this exciting part of the world. So my background looks a little different, and it's a different time of day for me than it normally is. Anyway, great to see all of you. Thanks for taking time to join us. You know, I just can't help but be excited about what I see happening around the world and taking place in the world of soy and all of the related things that we get involved with. You know, we hear about lots of changes and interesting dynamics. One of those lately that I'm hearing about, and it's related to the container situation and the supply and demand shortages. It's this tightness in the market for synthetic amino acids. And we think that really gives an interesting opportunity for U.S. soy to be studied. We've talked for years about the amino acid concentration in U.S. soy. So I think the shortage of the synthetic product should give people the opportunity to really look closely within U.S. soy and see how that can help solve some of the problems that many people are feeling. But listen, that's not why you're here today. So for this month's WASDE update, you're going to notice we've taken a little bit different mix to the program. Like always, first you'll hear from Mac Marshall, who serves as our Vice President for Market Intelligence for both USSEC and for the United Soybean Board. Then we're going to welcome to the stage the Farmers Business Network Chief Economist, Kevin McNew, for his insight and perspectives. And then we'll take a quick break. And then I'm going to be joined on the stage by three U.S. soybean farmers from different geographic areas of the U.S. And they're going to give us a fresh from the field perspective on the crop that they're just in the process or maybe have finished harvesting. And then we'll also talk about kind of what's going on their farms and the outlook for the future. But I think particularly given the focus in this WASDE on production, we thought it would be particularly interesting to hear directly from some producers that are just wrapping up their harvest. And of course, after that, then we're going to open it up to questions, as we always do. So please type your questions into the chat box anytime throughout the session, and we'll do our best to make sure they get answered. If you're not familiar with the WASDE, it's a report published by USDA, and it's used by people who are interested in commodity markets all around the world. And it really is seen as a gold standard for making crop projections. A lot of people look at it. So we're very happy to be able to talk with you about it. As I mentioned, we have two very well-respected economists that are going to give us their views on it as we start the session today. Mac Marshall, VP for Market Intelligence for USB and USSEC, and then Kevin McNew, who's the Chief Economist for the Farmers Business Network. And in that role, Kevin leads the company's market intelligence and analytics efforts, as well as drives new crop marketing product development. He's received numerous academic awards for his research and outreach during his time from the University of Maryland and at Montana State University. And he remains very widely regarded for boiling down complex economic issues into easy to understand concepts. That's always something I am happy to see economists doing. I love that. So thanks to our speakers for being with us today. By the way, I don't know if I introduced myself. I'm Jim Sutter, the CEO of the U.S. Soybean Export Council, and I'm excited to be the host here today. And just a couple more things before I turn it over to Mac. I want to share that this global soy complex continues to evolve, and I think it continues to be poised for future growth, given the growing demand for protein. And being here, as I mentioned, in Dubai and hearing about things in the countries all around here, I can't help but be excited as I think about the future that holds. One of the things that we all have been hearing about this week is the COP26 and the need for nature-positive solutions as it relates to climate and the environment. And as we see U.S. soybean farmers, they are truly part of the solution. We have goals and we have years of action that support and lead into the UN's Sustainable Development Goals, or SDGs as they're called. Not even hot off the press, and I'm just about to finish here, so bear with me. We've been informed that FEFAC, the European Compound Feed Manufacturers Federation, and the International Trade Center, a part of the WTO, have just approved the U.S. Soy Sustainability Assurance Protocol, commonly known as the SSAP, as being compliant with FEFAC's soy sourcing guidelines for 2021. You'll recall we've talked about this before, and it was compliant with their last version. They updated this and put new regulations, new rules, new guidelines in place. And we're so happy that we positively benchmarked with this again. And this is important because it's tied with the European Commission's proposal for deforestation-free supply chains, something that we're going to be hearing much more about when they release the regulations for this on November 17th, and we'll continue to be talking about it, I'm sure, for years to come. So on the whole, soy, and especially US soy, we believe is very well poised to help enable communities around the world to access high quality, nutrient-dense protein, and one that's produced in a sustainable way that supports a systems approach with the mindset of both caring for the environment and land for generations to come, while providing nutrition and energy for a growing population around the world. Now, enough for me. I'm going to turn it over to Mac for a dive into the numbers. Mac, it's all yours. Thank you.
All right. Well, thank you very much, Jim. And that is really exciting news to hear about SSAP getting the recertification with FEFAC. Certainly, we always want to maintain that fluidity of trade. It's absolutely critical for an export-oriented business, and certainly for ensuring that we can continue to move our high-quality soy around the world to customers globally. But with that, let's get right into the findings from today's report. So first, let's look at the November updates to the new crop or marketing year 21/22, those balance sheets, starting with the United States. Yields were revised down by 0.3 of a bushel to 51.2 bushels per acre. This reduction in yields translated into a 23 million bushel decrease in projected crop size, which now stands at 4.425 billion bushels, just over 120 million metric tons, and fractionally below the record 2018 crop. The export forecast for the U.S. was revised down by 40 million bushels, or about 1.1 million metric tons, to 2.05 billion bushels, 55.8 million metric tons. Now, with the reduction in exports outweighing the decrease in crop size, ending stocks were revised up slightly to 340 million bushels, about 9.3 million metric tons. The marketing year average price was taken down by a quarter to $12.10 per bushel. Now, we'll dissect this a little bit more on the next slide, but the U.S. soybean oil carryout, or the projected carryout, was revised up by 114 million pounds based on higher carry-in from the prior season. Now, turning to the international side, world ending stocks were revised down by 800,000 tons, as global production was taken down by 1.1 million metric tons in aggregate. The decline in total global production was in part due to yield revision in the U.S., but USDA also took down Argentina's crop estimate by 1.5 million tons on lower area. And that lower Argentine production translated into lower projected ending stocks overall for Argentina. Brazilian exports were revised up by 1 million tons, while China's imports were revised down by 1 million tons. Lastly, there were a number of changes to the Indian balance sheet, with production revised up by 900,000 tons and imports revised up by 100,000 tons. Some of this incremental supply translated into additional export, but the majority of that volume translated into a 780,000 ton increase in domestic use. Now, turning to the pre-release expectations. I mentioned some of those prior revisions to the old crop balance sheet, so let's go through those. Now, with the 20/21 U.S. marketing year in the books, there were no changes to the old crop balance sheet. Domestic soybean oil use was revised down with 123 million pound reduction in food, feed, or other industrial use, outstripping a 50 million pound increase in use for biofuels. That difference contributed to an increase in ending stocks of 114 million pounds, which carried forward to the new marketing year. There was also some switching of soy meal use from export to domestic. And then on the international side, Brazilian production was taken up by 1 million tons on a 300,000 hectare increase in harvested area, though that incremental production just translated directly into higher carryout. Argentine crush was taken up by 500,000 tons. And lastly, China's imports were taken up by 762,000 tons, while Egyptian imports were revised down by 200,000. Now, staying on this yield estimate slide for a minute, here are the pre-report analyst estimates for U.S. soybean yield and crop size. Now, as you can see, the market, actually, let's go back one slide. I want to go back to that bar chart for a second. As you can see there, the market was expecting overwhelmingly an upward revision to yield. So that prevailing yield estimate of 51.2 bushels to the acre, which you see in that green bar on the left-hand side, that translated into a surprise for the market following this report's release. If you're following the futures curve, pretty much closed the day about 20 cents up across it, counterbalancing some of the pre-report selling that we had had. And then accordingly, yield figures on a per acre basis, you got to translate that into the full country. So that also translated into a lower production figure. If you recall from last month, we had been looking at a potential record size crop. That slight reduction in yield has dropped us the 2021 crop slightly below 2018, as I mentioned earlier. Now let's turn over to the next slide and take a look at some of the the maps that are showing that regional distribution of yield changes. So here, as we're pulling that up, we have the maps from showing the yields in October and the yields in November that show the yield estimates by state. It might not be showing at the moment right now, but really what you want to see there is that the downward revisions to several of the larger production states, including Iowa, Indiana, and Nebraska, or and Ohio, not Nebraska, helped carry the change to the national yield estimate. So those downward revisions for those major Corn Belt states have really helped drive that. Now, let's go back to inventories and look at that, because that's really the other key figure that's being looked at in this particular report. So back to inventories, the projected carryout for this marketing year of 340 million bushels was toward the lower end of market expectations, as you can see on the chart on the left. And for the world, the new carryout figure of 104.57 million metric tons was below the range of estimates. Lastly, let's close out with the balance sheets here. I always like to illustrate the visual balance sheets to kind of show how those change from month to month. There were minimal changes on the old crop balance sheet for marketing year 20/21, so I won't belabor the point. Really, the only change you can see there is that aforementioned switch in soy meal utilization from export to domestic, about 130,000 short tons. And then lastly, to close things out, here are the visual balance sheets for the new crop. Now, relative to October, that production figure and export figures we touched on the first slide, those are down, leading to that net increase in projected ending stocks. So this concludes just kind of a quick and dirty recap of the key changes for the soy complex from this morning's report. It is now my esteemed pleasure to welcome Kevin McNew, the chief economist at Farmers Business Network, back to the program. Kevin.
Hey, Mac.
Welcome. It is great to see you again. How are you?
I'm doing good. Thanks to you and Jim and the rest of the U.S. Soy Council. I appreciate the opportunity to talk about these exciting times in soy markets.
Most definitely. Every year there's always something exciting, but it's always better when it's a positive surprise for farmers. And I feel like we saw that today, certainly with that yield estimate. What did you make of that? Did that take you by surprise at all? Because it seems like you caught the market a little bit flat-footed today.
Yeah, interesting question. I mean, Mac, we've been, at FBN, we track yields as they come in off the combines. And, we have over 30,000 farmers across the U.S. and Canada and Australia. And so, during different parts of the growing season, we're getting a lot of real-time data from them, whether it's planting or yields in this case. And what I can tell you about soy yields is they started out really strong. We certainly saw leans where we felt like USDA was undershooting, Nebraska being one of those. Clay's going to talk to us here shortly about his situation, but I can tell you Nebraska farmers knocked it out of the park in terms of yields, and USDA did bump up their Nebraska yield. We were thinking they might have to go a little higher, so we'll see if they do that in January. I think what surprised me on the yield side was really the Indiana-Ohio situation that you mentioned earlier. That is where yield really took a big cut, especially in Indiana. Talking to some farmers today, their take on it is, some of them had pretty good yields, but kind of the general consensus was it was a really cloudy growing season. We know about they got a lot of rain. It was wet, but they just didn't really get the solar radiation. And, I'm not an agronomist, but I'll kind of tell you what other people have told me is that if you're not getting that solar radiation, In the case of corn, you didn't have the stocks where they needed to be. And in the case of beans, the plants were pretty short. And so I think that translated into some yield drag this year. So I was surprised. The market was surprised. Good news for U.S. farmers as they see positive gains today.
Yeah, absolutely. I think the other notable change that we saw, at least on the U.S. balance sheets, was that pullback in the export forecast. I think you read the pre-report commentary, and just kind of reading through some of the tea leaves in advance of that. Obviously, we're looking at the inspections, we're looking at the export sales report. We of course had the impact of Hurricane Ida earlier in the season. Maybe seeing that come down a little bit, but I feel like there are a couple other dynamics at play. One, certainly we weren't entering this season with the same amount of captive supplies that we had last year. I mean, our carry-in from last season was less than half of what it was, going into the marketing year a year ago. So I think that's a factor. But, panning back out, looking internationally, Brazil's starting to get their crop in the ground. That's off to a pretty quick pace. Do you think that's factoring into some of the reduction here?
Yeah, I do. I mean, in the U.S., we can't discount the size and magnitude of Brazil. And like you said, they're off to a great start. Contrary to last season, they got off to a really slow start. That had ripple effects across the board for their growing season because it translated into a late second season safrinha corn crop, which led to freeze and drought and just really kind of big impacts on that second season corn crop. So they're off to a good start. It is a La Nina, which doesn't necessarily bode well for especially Argentina. When we look at kind of the probability shifting or the distribution shifting for a La Nina or an El Nino, Argentina is a little more likely to see crop problems in a La Nina event. But as I'd like to tell farmers, just because it's a La Nina doesn't mean they're going to have crop problems. It just kind of shifts the distribution. So, it's the early innings of a 9-inning ball game, and the first 2 innings look pretty good for them.
Well, I always love a baseball analogy. I always think back to my grandfather take me to upstate New York and seeing the Hall of Fame. But I digress for a minute. You talk about La Nina, and we certainly had some of those weather impacts last year when both Brazil and Argentina got off to a slow start. But the way the weather manifested itself was very different. Argentina wound up being dry. Brazil was getting slowed down because of wetness. And at the point in time, I was wondering if there would be some sort of potential yield drag later on in the season from Brazil. We didn't see that manifest. But, as we're talking about weather, and I think, some of that might be factoring into, that downward area revision, everything for Argentina. But sticking with Brazil for a second, I think the elephant in the room for ag markets as a whole is what is going on with fertilizer, what's going on with input costs. Obviously, soy is going to be less fertilizer intensive than corn. But, in Brazil, for example, they're already talking about, pull back on your inputs. Don't put as much in the ground here. Do you think that presents a potential risk for the overall crop size for both corn and beans down there?
Yeah, great question. And you're right. I mean, this is just an astronomical year of price inflation to not only U.S. farmers, but global farmers. So we're seeing these massive price increases, as you mentioned, in fertilizer, but we're also seeing it across the board in major farm chemicals. Glyphosate going from, roughly $14 a gallon up to $50 a gallon in a 1-year time period. So, there's going to be really tough decisions for farmers coming into the 22 growing season. And the Brazilian farmers and the Argentinian farmers are having to face those decisions now. What I know and talking to some of the people down there is, the Brazilian farmers are pretty more likely to spend on their soy crop and less likely to spend on that second season safrinha corn crop. So when you ask me, Mac, about, yield drag or yield risk, I think it probably plays out or manifests itself maybe more so on the second season safrinha corn crop, which is already kind of a risky gamble for them. They're really banking heavily on that soy crop being good. So I see maybe more impact down the road.
That's really intriguing as we think about like that counter seasonal production in South America and the implications that it has as our farmers are, purchasing inputs, certainly where they're available and ideally in those price points, which are somewhat palatable, and palatable is probably even a bit of a stretch at this point of the season. But if we're looking at that dynamic in Brazil, where they're more likely to spend on soy than corn, that ostensibly presents a potential for a yield drag on corn or some production performance issues. And if Brazil has another short corn crop, how does that potentially impact planting decisions when we look ahead to that February, March period as farmers are kind of finalizing their crop plans for this year or for 2022, excuse me?
Yeah, I mean, I'm firmly in the camp that thinks we're going to see pretty dramatic shifts in northern hemisphere acreage this year. Obviously, northern hemisphere growers are making decisions and planted or have planted winter wheat. My expectation is those acres, especially in the U.S., will be higher. And so I think that pulls some acres out. We know that happened last year, that U.S. farmers did grow a lot more winter wheat than kind of the overall market expected. And I think that probably plays out this year as well. And so, this year, I think we're going to see a pretty dramatic cutback in U.S. corn plantings and a big increase in bean plantings. And as kind of a parallel, when we look at like years, we have to go back to 2008 when we saw a massive run up in fertilizer prices like we did today. 2008 was a year when we had $140 a barrel crude. We had natural gas doing crazy things like it is today. So, while crude may not be at that level, and natural gas may not be at the level in 2008, fertilizer prices certainly are. And so we're at or above many of the key metrics for fertilizer values. And so in that year of 2008, we saw wholesale changes in U.S. farmer planting. We lost 7 million acres of corn and we gained over 10 million acres of beans, and with some other crops also shifting around as well. So we had just big changes that U.S. farmers made as a response to that.
Yeah, I think back to that period of time, that 06, 07, 08, period where you saw some really pronounced cropping shifts in the U.S. Certainly in 07, that was the year when we were starting to get those really strong signals coming from the new demand sector of ethanol, and that was really driving more corn area expansion at the expense of beans at that point in time. And then you saw that reversion the next year, predicated off of what you had lined out very well. It's those input costs. I mean, it's obviously that intensity of fertilizer. Your budgets become materially different when fertilizer prices obviously linked to energy prices and everything. When those get at those peak levels. So I think this is a potentially a really dynamic and pivotal year that we're heading into in 2022. But there's a lot to happen between now and then. Obviously, we're getting everything off the combine now. We have a good size or good read on what the sizes of the U.S. crops are. But I think one of those wild cards out there is going to be South America for those input driven reasons that you discussed earlier. Now, with that, I think the time is really well set for us to hear directly from some of our grower leaders, who are experiencing this and living it, firsthand. So, with that, I'd like to, pivot the program back to Jim, who's going to welcome on a couple of our USEC directors here for their perspectives from a couple of the major states. Now, while that's going on, I encourage, more of our audience to come up with questions, put them into the question and answer box, and after Jim is speaking with our panel of growers, Kevin and I will be back to answer more about the markets. So we'll see you back in a minute.
Those experts talk, and that's a great thing about economics. We look at the past and we look out into the future. So they gave us a good macro view of what's going on. And now I am so fortunate to be able to kind of host a panel of 3 grower leaders from around the United States. They come from different areas, and we'll introduce them in just a moment, but they come from different parts of the U.S. So you're going to be getting a view from we have this big footprint of U.S. soy. You're going to see different areas. But what we have in common is they are all volunteer leaders in their state soybean organizations. And so we reached out to these state organizations that we partner with a lot, and we're so fortunate to get some great grower leaders to participate with us today. So I'll thank you. I'll thank them in advance, and you're going to love this. You're going to really enjoy this. So we're joined today by Clay Govier, Bill Bayless, and Kevin Maynard. Clay's from Nebraska, Bill is from Ohio, and Kevin is from Missouri. And I'm going to turn it over to them in just a minute. Let me set the stage up here just real quickly. So as I said, we're going to get kind of down on the farm now and hear from them about what's been going on their farm, what is going on, what's going to happen in the next year, they think, after we got that macro picture. And one thing I just wanted to point out to you, that if people want to actually see some videos of what's going on the farm at this time, go to our ussoy.org website and look at Soy Span. There's some videos there. I actually just checked it out a few minutes ago. It's dark, as you may expect, in Southern Illinois right now, where you can see these videos, but that's something you can follow as well. But anyway, I want to get back here on the farm. So we're going to we're going to go from east and work our way out west. So that puts Bill first, and then Kevin, and then Clay. And I've got a series of questions I'm going to ask them. We're going to let each of them answer the questions. And I can't wait to hear what they have to tell us. So the first question I'll ask them to do is talk to us a little about your farm and your family, and talk about your harvest progress for the 21 crop, and how did it compare versus what you've harvested over the last several years. Bill, please start us off.
Well, thank you, Jim. And I'm happy to be here sharing time with the rest of the world in what's happening here in the Eastern Corn Belt. We're an average family farming operation. I help my daughter and son-in-law farm. I'm transitioning the main operation over to them. That allows me more time to do meetings like this. But we're in West Central Ohio, which is on the far east side of the Corn Belt. And generally speaking, we've got a little better than average yields, I'd say statewide. Now, granted, we've got some places that are too wet and up in the northern part, and they're hurting still, running behind getting their harvesting done. Right here on our home farm, we just finished last week. We had probably the best yields ever in both soybeans as well as corn right here in my local neighborhood. So we're really happy and looking and glad that we're done before Thanksgiving time, which is usually our goal, to get wrapped up before the weather really changes. But as I check with some of my other neighbors around, I hear where by and large in our area right here in central Ohio, the yields are better than normal. Looking into next year, though, I think it was talking a little earlier here about the input costs, and that is a really hot topic in our area. So mostly our nitrogen, our fertilizer, seed chemicals are almost double what they were. So a few of us were fortunate enough to get some of those prices locked in early. And we'll probably try to stay in a balanced rotation, similar to what we had. I'm for probably more soybeans planted next year, just because of a lot to do with the input costs. So I think we do try to watch, keep things balanced from year to year, because you can't gyrate too much. And by doing farming with no-till, conservation tillage, and working our cover crops in, we are able to maintain our soil properties better. So the long term, when I got grandkids coming on down the road, we're looking at a bright future. So thanks for sharing some time with us tonight.
Great. Well, thank you, Bill. I appreciate that insight. And I think those are probably pretty good words of wisdom, that you keep things, you don't want to get too wild reacting to short-term things. You've been at it, as you said, 40 years. So you've seen lots of crops come and go. Okay, now we're going to transition down to Southeast Missouri, and I'm going to turn it over to Kevin for a little feedback about his family and his farm and this year's crop. Go ahead, Kevin, over to you.
Jim, it's good to be with everyone this evening from Southeast Missouri. Our farm is located in the Boot Heel of Missouri, about 15 miles from the confluence of the Ohio and the Mississippi River. And our farming operation consists of about 10,000 acres, which we farm soybeans, corn, and wheat primarily. The crops this year have been fantastic. They've been record yields. We farmed since 1984. And most of the farmers in our area have commented this has been the best yields that they have ever experienced across the board. We're a pretty diverse area in that we have rice and cotton, a lot of different crops, potatoes, wheat, soybeans, popcorn, you name it, and we can grow it here. But we have been blessed this year with great yields, and we're in the ag retail business, so we understand exactly how fertilizer and chemical prices are going to affect this coming year's crop plans. And certainly I think that people are going to be looking at precision agriculture to squeeze the input cost of all of those crops. And I would suggest that probably this area will look at increasing soybean acres, just as we've heard from some of the other panelists this evening. Certainly we can grow soybeans a little cheaper than what we can corn with input costs. And, primarily most of our guys look at those very heavily. So I would say it'll be a big soybean year in our area, and we're blessed to have soybean yields about 10 to 15 bushel from what they normally are, higher than what they normally are. In the state of Missouri, we're about 59% harvested at this time. That's about average for 5-year average. In our particular area, we're about 85% harvested at this particular time. So it's great to share those comments with you all this evening, and I look forward to hearing the rest of the comments from the other guests.
Great. Thank you, Kevin. I appreciate those comments. And you being located so closely to the river, I'll bet some of our listeners today from around the world, they've probably had soybeans from your farm that have gotten on a barge and headed down to New Orleans. So now let's go out to this. Yep, that's great. Let's now transition. We're going to move further west. We're going to go out into central Nebraska. And our Kevin McNew talked a little bit about Nebraska. So now we'll get an on-the-ground look at what's happening out there in the middle of Nebraska with Clay. Over to you, sir.
Thanks, Jim. Good evening and happy to be here. I guess, like I said, I farm in central Nebraska. I'm a 5th-generation farmer, so I've been here a little while, and I farm with my dad and my brother. We have a relatively diverse row crop operation, about 3,500 acres. Mostly corn, soybeans, but also some yellow peas, cereal rye, kidney beans, alfalfa, and other forages for cattle consumption. So we were fortunate. We finished harvest last week too, which is nice. It was a really mild weather for our fall here, and we were able to kind of get things wrapped up and now just kind of cleaning things up and putting them away for the winter before we start getting a lot of snow. Pretty happy. I would say, as far as soybean harvest progress, it's pretty hard to find any soybeans in the field yet in my neck of the woods. I think Nebraska generally is, I think we're about 95% harvested. So, I would suspect that we'll have it wrapped up in a week or two. And then corn's not going to be far behind that. So, harvest has really gone pretty smoothly. We've received some precipitation, a little bit of snow out in western Nebraska. But other than that, there's not a lot to complain about. I think I can echo what the other panelists have talked about, record yields. On our farm, I would say we're above our average for sure. I think 2018 was still probably a little bit better for us. But still, really happy with where things are at. And I think Nebraska is actually on track to possibly have a record average for soybean yields this year. So on our farm, we're probably in that 70 to 88, bushel an acre and we're largely irrigated, so we do have the advantage of center pivot irrigation in central Nebraska, but eastern Nebraska received a lot of timely rains and things. So I've just heard a lot of good yields, whether it's corn or soybeans. So yeah, and like I said, I think it above average for sure on our farm, and pretty much everything that I'm hearing from my neighbors.
Well, great. Thank you for that, Clay. Thanks for that report from Nebraska. And I would say, just kind of trying to synthesize that, pretty good crops, pretty good progress with harvest. So I think that people who are listening from around the world should be taking some positive news out of that we're not having big problems with the harvest, and the crop's coming off pretty well. So that's really good news for people who are interested in making sure we have a supply. Now let's fast forward a little bit and talk, and some of you touched on this already, so we don't need to rehash it too much, but I think any discussion with grower leaders like yourselves would be, we'd be short-sighted if we didn't ask about innovations that are taking place on your farm. And kind of, what do you see if you think, 5 years ahead, maybe as much as 10, what'll be different? What will you have? What kind of equipment, what new things will you be doing to help you make sure you grow a good crop? So we'll go back and start with Bill on this question.
Oh, that's an interesting question, Jim. And I think when we're enjoying these good yields we had this year, I got to give credit to genetics. I remember as a young farmer, we was doing everything we could to break 200 bushel, and now we got a 200 bushel average over the whole farming operation. So it's I know we've got better equipment. We're got a lot better drainage programs now, better fertilizer plans. But you put that all together, the yields just keep getting better with really on less acres. So into what can come next, I'm seeing drones coming on as scouting solutions. Always the newer equipment coming on with things I can't hardly imagine. It's an exciting time to be in the farming business.
Well, great, Bill. Thank you for that. And you certainly touched on several new innovations that I get to hear bits and pieces about. Kevin, how about in your operation?
I think site-specific farming is growing every year in what we see. Precision agriculture has grown by leaps and bounds, and I see as we're squeezed with increased input prices that's going to be a focus of most farmers to look at those new site-specific opportunities to involve them in their farming operations.
Well, that's great. And it's certainly, all these things tie to sustainability, and both environmental sustainability, and we can't ever overlook economic sustainability. And I think that's especially what you were touching on there, Kevin, is that these new tools can help make sure that we're making the investment with fertilizer and things in just the right places where it's needed.
Exactly.
So Clay, how about in your operation? What do you see as you look ahead?
Well, yeah, in the next, 5-10 years, it's kind of tricky to predict, but I do see, especially in the soybean world, being able to tailor your genetics, whether you're tailoring it to a specific, say, soil type or region to produce more. And I know we've been doing that for years, but I think, the advancement is going to continue to ramp up there. But, say like in the world of, aquaculture, rather from a feedstock perspective, I think we're going to be able to, kind of tailor that soybean based feedstock to really support that market in a big way. So, I think, I guess really like tailoring genetics, I think is going to be a big component of it, as well as, being able to do things to just increase, yield, or whether, focus on oil versus meal, things of that nature.
Yeah. Well, I'm glad you mentioned that, Clay, because I think that's really, while we may think some of that sounds a little far-fetched today and a little, too futuristic, we can't underestimate the way things change. And I'm holding up my cell phone here. It wasn't so many years ago that we didn't have these things, and now we're all so dependent upon them, and they do so many things for us. Just imagine as we are able to tailor grow a crop for specific uses and then somehow get it to people around the world. I don't know how well that's going to play out, and it's going to take lots of smart people to help us figure it out. But I think we'll make progress in going down that road. So now we're up to our last question. We've got just a few minutes left in our section of the meeting. Otherwise, we're going to get the hook and get pulled off. So I'm going to ask each of you to just talk, because I know everybody's always interested in how your marketing's going. So could you just talk a little about your 21 marketing? How are you fully marketed, partially marketed? How's that going? And then your outlook for the 22 markets. And this will be our last question for each of you. So Bill, over to you.
Oh, that's always the interesting part, Jim. And we're fortunate that got a little aggressive and got our 21 crop, I would say 85% sold. And we're even into a little bit and got some, got a little bit of the 22 crop already contracted in. So I really wonder, it's always the big thing, just like today. We were all geared for a down market, and lo and behold, it's the opposite. So that's the farming business, and particularly the marketing end of it. Raise a great crop, but if you can't get a good price, it's always the challenge of business. So that's where we're at.
Good. Thank you, Bill. Sounds like your plan has been working. That's good. Kevin, how about you?
We were about 30% sold as we went into this year, and increased sales as we saw markets increase. And we are about 70% sold at this time. Of course, we were, like Bill said, we sold a few beans before the report came out today, and that turned out to be the wrong thing to do. But you can't always be right when it comes to marketing. You just got to use your best judgment. And we're about 25% sold going into the 2022 crop.
Well, very good. That's sounds like we have a consistent pattern going among you smart farmers. Clay, over to you.
Ditto, basically. I think, for this 2021 crop, we're largely sold. And like Kevin said, we did price some beans and 2022 crop right before the market report today, and then once things went up, we priced a little bit more. So I would say we're in that 20% range sold for our 2022 crop. And I guess I didn't say earlier, but I think we're going to be a little bit longer on soybeans, and a lot of that is due to fertilizer prices and our typical rotation and everything. But yeah, we decided to price a few more today just to reduce our risk there.
Well, good. As you said, there's always plenty of uncertainty and interesting times ahead. I do think, I continue to be so impressed on how U.S. farmers continue to adopt technology and utilize the best practices. And we just when you think the crop can't get any better, we continue to see from our farmers continued progress. And I'm just going to wrap it up here and say thank you to the great grower leaders that we had. Thank you for taking time to join us today. Thanks for your service to your state soybean boards and for the cooperation that the whole U.S. soy family has together. We really appreciate that. I am now going to turn it back over to Mac. I know there are some questions that people have put into the chat, and we want to get to those before we say goodbye for today. But thank you, panelists, and thank you all for being a part of our program.
I was so caught up in listening to the panel there, I almost forgot to come back online. It's fascinating. Every time I hear some of our grower leaders talk, I always walk away learning more. And, I think it's one thing to hear me talk about the markets. I think it's quite another to actually get that perspective direct from our farmers and learn more about the practices that they're undertaking. I mean, even in this pivotal market where, we have these fertilizer costs, which are, going to dictate planting decisions, I think, to some degree. What I walked away from with that was that our farmers are still, fundamentally focused on agronomic practices and doing what's going to be best for the land and, ensuring sustainable practices, from both a environmental and from an economic standpoint, as Jim had brought out. But we want to get into your questions, of course, and have a couple flowing in here. So I'll just jump right into it. Kevin, so one of the updates that we saw in this morning's report was that reduction in Chinese imports for the marketing year that we're in now, rather. There had been some consternation earlier in the year about Chinese crush margins being tight and that being a reason for maybe some declining imports. Now we're hearing some news out of China about, hey, start stockpiling stuff. What's your read on the Chinese market, at least as it pertains to this season and a potential import behavior?
Yeah, I mean, great question. I remind, the people we work with, the farmers and such, that, China crush margins or hog margins, they are so volatile. They can literally turn from super profitable to super unprofitable really, really quickly. And so, we've been in this kind of cycle of unprofitability, as you mentioned, which is, of course, slowing the pace of exports or slowing the pace of imports. But I think, keeping our eye on the long term, which is, that's a growth market. It may be not as growing as much as it has in the last decade, but it's still a growth market. Southeast Asia is a growth market. I mean, there are so many growth markets, as I'm sure you guys are well aware of, because you're creating those markets. So, we're going to have ups and downs with China. I don't see anything systematic that concerns me around this. It was a haircut going from 101 million metric tons to 100 million metric tons. Again, that can quickly turn, north if we see margins turn quickly like they have historically.
I think that's a really good point for contextualization. I mean, if you were to look at a long-term chart of Chinese crush margins, it basically looks like an EKG, just all back and forth, maybe an EKG after you've been, running a lot or something, or playing basketball. I don't know. But like we've got this interesting wave happening here in the U.S. and getting a lot of questions about it as well. Really germane for the oil space, right? And that's this surge in renewable diesel. And I get questions about this all the time. In terms of what their trajectory looks like going forward. My view is certainly there's a lot of interest in this. We're seeing a lot of investment up front from traditional energy players and some greenfield construction from other refiners, and now we're starting to see crush capacity get built out along the way, which is going to be critical for supplying or ensuring that stage in the supply chain for getting that feedstock back to the refiners. There have been a wave of announcements the last couple months around that new installed crush capacity. I think we're potentially looking at 400 million bushels of new capacity coming online in the next couple of years. Let me ask you, do you see this as a trend that's going to be kind of secularly moving forward, where we can have more of that refining capacity being met with the feedstock through more crush, as we look at the latter half of the decade?
Yeah, I mean, it's a really interesting trend. And as I think about, does it have parallels to ethanol? I mean, in some ways, yes. The policy seems to have momentum in the biodiesel space, like ethanol did in say the mid 2000s, for very different reasons. And I think what's unique about this, and you hit on it a little bit, Mac, is this co-investment by big oil and big ag. It's really something we have never seen happen in this space. It didn't happen in ethanol. It was strictly farm co-ops and then, venture firms that basically just did it from, they were going to invest in these plants. But now you have these alliances forming. For example, ADM, one of the world's largest soy processor, is now in a joint venture with Marathon Energy to build the first soybean plant in North Dakota. You have Bunge in the southern part of the U.S. along the river system, doing a joint venture with Chevron, another major energy company. So I'm curious from your perspective, Mac, you sit, you have your pulse on a lot of policy stuff. I mean, do you think this has real legs to give it long-term, longevity here?
Yeah, my view on it, Kevin, I came into this role a year and a half ago, and a year and a half ago, I could have not have told you what renewable diesel was. And now I'm not going to claim to be an expert on it by any stretch of the imagination, but I feel like I've got a better understanding than most, which really I think underscores the pace and velocity with which this market dynamic has really impacted and rippled and spawned back out. As you said, now you have these traditional, petroleum-based players who are getting involved and really kind of coalescing, ag and energy together. So, my initial take is like, once you start seeing all these announcements of these proposed builds and you see what the potential volume draw is on it, you get very excited, say, hey, this could be a 5 billion, 6 billion gallon market. And in terms of like the feedstock that's going to be needed to supply that, that implies that it's potentially, a 40 to 50 billion, 40 to 50, billion pound market as well, just in terms of feedstocks. Now, naturally, we don't produce that much soybean oil in the country. I mean, certainly our farmers are going to be cultivating, they're going to respond to market signals or respond to those environmental signals to make sure that what we're cultivating there is going to get there. So, in a vacuum, if you just have the policy oriented stuff in place, it seems a little bit ethereal. But where things really started to get real for me was when you started seeing these material investments being made by existing crush players, not just the major ones, like your CHS, your Cargill, your ADM, but you also have smaller players coming in as well and arranging some of these offtake deals with traditional petroleum companies too. I think it's when you start to see that private sector investment really flow in that this gets legs from it. And that's just, that's my perspective here. So, putting that together, kind of those initial, announcements around the renewable diesel facilities, again, be they, greenfield construction or retrofits or expansion of existing capacity, that's one thing. But then seeing that material investment that helps de-bottleneck the system is what is really exciting here. And I think it presents a great opportunity for farmers. I think it also creates a great opportunity for international buyers as well, because I don't know if we've touched on this on a prior version of this webcast, but we've seen this fundamental shift in crushing dynamics here in the US, where oil is starting to be the lead driver. Traditionally, it's been meal by a pretty considerable margin. Now they're basically being, at parity for crush value. And then as oil's leading it, we've seen meal get cheaper and cheaper and cheaper. And I think that presents a great opportunity internationally for an even broader base of customers to experience, US origin soy meal, or either for the first time or potentially higher inclusion as well. Simply part of that being predicated on cost. So it's an exciting and dynamic time. Now, all this said, with that, crush capacity expansion happening in the U.S. and, a lot of that being driven to help, feed this very hungry new and emerging market. If I were a buyer internationally, I'd be asking, well, hold on, are there going to be beans available? Oh, so let's right size that a little bit, right? We're growing a 4.5 billion bushel crop overall. And, even with that new crush capacity coming online, what's that going to take it up to? 2.7, 2.8 billion bushels at most. There's still a tremendous amount of supply here that's going to find its way into international channels. And we need those international channels. We're fundamentally, an export oriented crop. And, I think this just really creates a lot of opportunity both here domestically and internationally. So I'm pretty excited about it. And, bringing it all back to the farm, I think when you have those new disappearance channels start to emerge, that creates good opportunity for, our farmers. And that's certainly where the system begins. But, I think turning back to the 2022 season, I would be remiss if I didn't ask you, because the last time I think we had you on was for planning intentions. And, in 2021, it was very clear that the market, after a prolonged period of soybean prices really being in the doldrums, that the market was going to call for a lot more beans, 89 million, 90 million, 91 million, I think were some estimates there. FBN was saying 87.6 million. And the number that came out and, was not like, it came out in March and then was not revised in June, was 87.6 million. So I really have to applaud that. So I'd be remiss if I didn't ask, what do you see for 2022?
Yeah, well, I have to thank our 30,000 plus farmers that give us that data, because I'm not that smart, Mac. I've been doing this for 30 years, and I can tell you, this is the best year I've had calling USDA reports, and it's all thanks to our farmers like Clay and others around the globe that give us that data. But I do think last year, here's what we saw. When we got our data back from our farmers in March and again in June is, the market likes to look at price ratios and say, oh, farmers are going to do X. They're going to plant corn, they're going to plant beans, and the market's going to have its bias. Clay and Kevin and Bill, they're each little economic engines making their own decisions in their own circumstances locally. And what we saw last year was, and I alluded to this earlier, wheat stole a lot of acres. Winter wheat stole a lot of acres, especially in some of the key grain states. We had Illinois farmers that planted a lot of winter wheat last fall, because last fall was a totally different environment. We were sitting at $3 and change on corn and $9 and change on beans, and wheat was the only thing that was really sort of attractive. This year, prices are certainly up, but my gosh, costs are through the roof. And so, we'll see. But my hunch is, and our farmers have kind of testified to this, that, beans look pretty darn attractive right now. And I think that's going to be the lean going into it.
Well, certainly a lot of decisions to be made between now and when those seeds are actually getting dropped in the ground. So, pivotal time for positioning and purchasing and making those crop plans. And, Clay, Kevin, Bill, we appreciate everything that you do to really start the whole value chain here. So I know those decisions don't come easily between now and planning time. Kevin, this was fantastic. It's fantastic. It's really great to have you on, get to talk about this. I feel like I know a decent amount about commodity markets, but I really do feel like I walk away from these discussions with you, a couple degrees smarter. So very much appreciate your time today. And thank you for joining.
Absolutely. My pleasure. And I appreciate getting to hear you guys, because you guys are on the front lines of demand stories, Jim being in Dubai and, the things you are doing there it's really exciting to hear.
Love it. It's a totally global system. Well, with that, that's going to conclude our November WASDE webcast. We want to thank all of you for joining. Really appreciated the questions. Thanks especially to our grower leaders being able to join and give their perspectives on what's shaped up to be a really excellent crop and harvest overall for the country. Certainly, we got some pivotal decisions ahead between now and 2022. Ordinarily, this is the time where I'm plugging next month's WASDE, and that report will drop on December 9th. However, in lieu of doing our traditional WASDE webcast, it's typically a quieter month in terms of the figures that get updated. What we will be doing is a special webcast on a topic which we actually touched on today, which is renewable diesel and biofuels implications. So we will be running that at 7 a.m. Central Time, so in the morning on December 9th, where I'll be joined with a couple other panelists from the American Soybean Association, as well as LMC International, which is a oils consulting firm, to talk about the implications of renewable diesel, traditional biodiesel, sustainable aviation fuel, and what it really means for soy markets, both domestically and for our international buyers around the world. So you won't want to miss that. Different time change. Won't be doing it in the evening US time, but in the morning, and really hope you can all join us. And then lastly, standard plug here, we always have a survey at the close of the webcast. So please take a couple minutes to fill that out. We want to keep bringing you good content that you find informative, and really address the topics that are of interest, particularly as we're in another dynamic year in the world of soybeans. So with that, thank you all very, very much for joining. Good evening, good morning, and good afternoon, depending on where you're joining from. And with that, I'm Mac Marshall, the Vice President of Market Intelligence for the United Soybean Board and the U.S. Soybean Export Council. Thanks again.